This is our Forex blog for September 4th, 2012. And like we do most days, we start off the first step of our easy three-step Forex system is using our currency meter to find the strongest and weakest currencies. You can sort it using our sortable currency meter. We have a bunch of them. One of them allows you to sort it and easily see the strongest ones on the top. You can see the dollar strong on all time frames. The New Zealand's extremely weak. The Australian is weak on most time frames. The real-time trend here is made up of multiple different tools. Some of them measure the direction, and some of them measure the intensity, and we average it together. Anything at and above the 80 level is extremely strong or weak. Red if it's weak, green if it's strong. And the more time frames that line up to the downside, you can see the Australian extremely weak here at 930. The dollar was consistently strong. The yen was decent strength too, but it also had previous to that a very weak daily trend that was down. So one of the higher odds ones at 930 would be to buy the Australian dollar. I'm sorry, sell the Australian dollar. Weak Australian, strong dollar. You can see that this currency, here's yesterday's most actively traded price. Typically when you're above that, the trend goes up. Below that, the trend goes down. This is the upper value area, lower value area. When it breaks out from earlier today, it was underneath this level and went above it. That led to that huge move up. It came down, found support here. Typically that's when price goes up again. You can see the weekly and monthly trend was down, and that's why that trade right here failed. The more time frames that you trade with, the better. If you want to take a counter trend trade and buy it, just realize that it's likely to run out of steam because it is so weak. Also, one of the other reasons for this thing stalling out was the fib area from this high here to the low. You always need to be aware 38, 50, and 62% typically are the end of the move. And this was also right near our upper containment band, so it ran out of steam here. Once it pulled back and retraced back up again, found resistance right here. This was a pretty high probability place to sell and high probability place to sell, even before the currency meter showed it weaker. The reason for that is this is about a 38 to 50% retracement off of this wave, right to the 50% level, right to the upper value area. The longer term trends down, and at that point, all the 15-minute, hourly, daily, weekly, monthly is all pretty much down right here, and that led to this move down here. If you started trading during the U.S. session for this particular pair, there's a couple of trades that are decent. This is a two-bar pullback right here. It didn't have that much strength, and then the bar closed down. When it goes one pip underneath that, this is the value area of the previous day. That led to about a 15 pip drop, and then it retraced back up again, went sideways. You might have shorted this again here, and it dropped, and you can see there's not that much weakness on this bar. You put your stop above that bar and you might have made 2-3 pips on there. And when it goes sideways like this, there's no trades. Usually wait for 3 to 5 bar pullback after it's made a nice two-wave move down. Let's look at the next currency on the currency meter today. The New Zealand was also extremely weak throughout the day, so selling the New Zealand dollar also makes sense. And look, when you first look at the chart, notice where the hourly is. Is it above it or below it? If price is above it, it tends to go up. Below it, it tends to go down. What's the longer term trend? In this case, the weekly and monthly trend are both down. Here is the previous day's average price, Monday, which is not very actively traded during the U.S. session because of the holiday. But above the yellow point of control of the previous day, the most actively traded price, price tends to come up. Underneath that area, price tends to come down. All the time frames are down when this breaks right here. What a high probability trade. And you can see this is a value area low of the previous week. What that means is last week spent 68% of its trading activity from this area here to the upper previous week value area. And so when it actually had a false breakout above here, came back down, tried to get back up again. This bar right here, you can see, had a little bit of an intensity, quickly it fell away. This is a pretty high probability short right here, just because failed breakouts tend to go the opposite direction. They go back into the direction of the longer term trend. And this one just took off. This was a nice 10, 20, 30, 40, 30 or 40 pip move. And then you got a nice pullback right here, nice 3-bar pullback, right to the weekly pivot level, our signals gave a sell signal right here, so you sell it when it goes 1 pip underneath here at 52. You put your stop at 59, not even risking 10 pips, and you can see the trailing stop got you out here at 33. You're short at 52. You almost made about 20 pips there. And when it's down below the lower containment bands, it's a pretty risky trade. So, if you see a sell signal, it's up to you whether you take that trade. But if you do, here's how you manage to lose less on the lower odds trades. If you shorted it when it went 1 pip underneath here, you can see this bar here did not have that much weakness. And then on the next bar right here, there's a little bit of strength. So you move your stop down, right above this bar. If the trend's going to work, usually, especially a high risk trade like this right underneath our lower containment band, these are areas where the price typically reverses. So, when it gets down to that level, if you do take a trade like this, which I seldom do, if it's the first day of a new trend and the currency gets underneath there, it can oftentimes continue. But if, in the case with the New Zealand dollar, if you scroll back, notice, it was going sideways and it went down yesterday. This is, really 2 days in a row down. It's underneath the lower bands. It's less likely to work. If you trade every day, you kind of get a feel for how many days up or down, or, a series of, if a currency's been going down for a week or two, maybe 2 days down, 1 day up, 3 days down, 2 days up, the lower containment bands tend to exhaust price. And if you're really a counter trend trader, when you see it hit one of my fib areas, this is a Fibonacci profit target level in dark gray, Fibonacci retracement levels are in light gray. When it's at one of my, what I predicted to be the low today, which I was right in this case, you can look for a counter trend trade by buying it when it goes above, the trend line over the bar's high, along here at 30. You want to see some strength coming in, kind of just working at its way sideways right here. I would have probably got out somewhere in the middle here of a counter trend trade at 39, only making, after the spread, 6-7 pips. Usually when a currency has also gone down a lot, it'll tend to go up and then down, or in this case sideways, up again. But this trade right here is very high probability because it's not right near the lower white band. It's above the 1.5 band, and you have good room to run. You can short this at 42. You have a good chance of it coming down to the monthly pivot level down here at 22 to 25. So you have a good chance of making 15 pips while risking. This is a 5 pips per bar. Put your stop 1 pip above the high, that's 6 pips plus the spread. You're looking at 7 or 8, definitely less than 10 pip of risk, and you have a good chance of making 15 pips. When it comes down there and it's going sideways and the weakness disappears, you want to get out. Let's look at another, what I consider relatively easy way of trading. This is our quote sheet or hot list with 2 new fields that we've put in here. The daily and weekly value area, and it basically shows you how many pips above or below the previous days and previous week's value area each one is. And if it's above the upper value area, it's dark green. If it's below the lower value area, it's dark red. And when you sort these, if you have a currency pretty much above both, like the pound yen, you can look for buys whenever it goes above the previous hour's point of control. So let's bring up the pound yen. This is showing, instead of the histogram format, we have colored bars on here. Let's put on the intraday value areas. And today was a relatively low volatility trend day. Let's put 60 minutes on here. This is going to download tick data, and it's going to show you where the previous periods of point of control is. And again, the point of control is the area, the price most actively traded during the previous hour. If you get breakouts from underneath to above the point of control, and especially if our bars are green, it's a pretty high probability trade. Here's a 15 pip move. You can see earlier in the day the price was also above the value area of the previous week and the previous day. You have this trade right here at 55, went all the way up to around 80. That's a nice 25 pip win. The next hour, notice it's underneath the point of control of the previous hour, and that means the trend's likely to go down. And where did it go? It went down. And this hour right here, The previous move was down. The market kind of opened up right near the value area. When it breaks down, you can go short. You can see that fell from around 57 all the way down to 38. Nice 20 pip move. And at this point, the trend's down. When it goes above, has a false breakout above these point of controls, and then comes right back down, that's a relatively high probability trade too. Now it's right at, I think, the 10-day moving average right there. It's a major support area. It went above the previous hour's point of control, and it went up 10 pips. And this is a very easy way to scalp and catch 3 to 25 pip moves over and over again. And the colored bars also, I think, make it easier to trade than the histogram, because you can make your chart bigger. Here's the previous, here's the previous New Zealand dollar. Notice this without the histogram on the bottom. I have the colored bars instead, and you can put the hourly intraday value areas on this and spot some trades that you wouldn't normally find without it. And again, when price is underneath the previous hour's point of control, the yellow line, which will come up in a bit, trend tends to be down. And notice when you have a weekly and monthly trend that's down, your first trade of the day really could have been right here when it broke from above to below the value area. Decent trade, came back up, tested the value area. This was the price most actively traded during the previous hour, 79.87. And guess what? Stayed underneath it. This hour right here, it opened up underneath it, broke down, not a bad trade too. Sometimes you have pullbacks like this where a lot of the activity happened up here near the high. Unfortunately, this one was in the middle or towards the low of the range here. Notice also this area right here, the previous hour spent most of its activity at the low. When you see the lower band get hit and it breaks the point of control, which is right there, it's a pretty high probability counter trend move. Went from 44 all the way up to 58. That's a little scalp trade. I might have taken that trade if the weekly and monthly trend weren't so weak. I probably would have passed on it, even though I know that this trade works probably 70% of the time from my own experience. When you spot these value areas right near the lows or right near the highs of the previous hour, you usually get pretty decent moves out of it, because it means that pretty much everybody's stuck in their trade right at the maximum price of the swing. And right here, there were a lot of traders, short right here from the low, and it starts to go above that area. Traders that were short the previous hour, which again, this is the most actively traded price. They're losing money, and it shoots up. Now later in the day, you can see the point of control is somewhere in the middle of the range. That makes it harder to trade. I don't usually sell point of control breaks right near the lower band. If it was up here near the high of the previous hour, maybe another 8 to 10 pips up, maybe this bar here, if the yellow point of control was up here at 40, I would have taken the trade, because it has a good chance of going down here and making me 17 to 20 pips. In the middle of the range like that is a lower odds trade. And if you think the trend is down and it's made a lower low, this would be a 1, 2, 3 low if it found support here and it went up. If it comes, a lot of times trends reverse when they hit the point of control of the previous hour. Anyone who bought the previous hour and is buying that area again, if it can't break that level, it starts to go up. Everyone who's short the previous hour is losing money. They rush in the cover and it pushes it up. So I haven't spotted one of those trades today, but if you find those, they're pretty high probability. Also on this trend, it fell pretty far. Here's the pullback. There was a decent amount of strength right here, and this bar right here went light red. It's a higher probability short when you see that. Put your entry right here, 1 pip underneath the low, your stop 1 pip above the high. And when you're in a trade, it gets really weak and then slightly strong, just barely, and then red again. And then when it comes down, you're expecting it to run out of steam underneath the lower band, hits the monthly pivot, my Fibonacci profit target level. You're probably out somewhere in here around 27. So you're short at 52, and you made about 25 pips on that trade. Very nice trade. Let's look at the currency meter one more time, or actually the area right here. Australian dollar. Keep in mind they were both under the previous days and previous week's point of control. Same thing with the New Zealand yen and New Zealand dollar, as I just showed. So because it was underneath the previous days and weeks value area, that was why you would be looking to sell this up here near the high earlier in the day. When it broke this value area here, you were already anticipating a downtrend, and it just collapsed. Beautiful trade. Let's look at the Australian dollar, which is another one that you would have been looking for underneath there. Let's put the value area on here, intraday, previous hours, point of control. And if you want to only see the yellow area and you don't want to see the upper and lower value area, which on previous hours I don't use the upper or lower value area at all in my own trading. There are some uses for it for longer term, previous day, 4 hour, but as far as the hourly one goes, I don't really use it. So this was trending up earlier in the day, and obviously, you know, when it goes from underneath above a point of control earlier, you can see the bars are very green. It was very strong here. This pullback right here, this was a very high probability trade. It went from 67 all the way up to 87. But because the weekly and monthly trend were down, here's the previous week's low, it looks like. We had a false breakout from underneath above, you know, the previous week's low. When it comes back down right here and breaks the previous hour's most actively traded price, it's a high probability trade. You know, and here's, unfortunately, during the previous hour, it spent out most of its activity down here near the low. Notice this counter trend trade here. If it had gone up and the point of control was up here near the high, that would have been a wonderful trade. Here it couldn't get above the point of control. That's always a good trade, especially when it's not down below the band. And this trade right here, it went above it. It went light green right here. You get short, and once it breaks that, it's a pretty high probability trade too. You can also use these both for entries and to confirm that your trade's working. Let's say you got short right here when it went underneath this bar here around 40, 41. If it comes back down and stalls here, you got to get out of your trade. If the bar is light green or light red and stalls here, you probably want to get out of your trade with 3 or 4 pip win. If it penetrates it, you know, there's a good chance it's going to move another bar or two. And these bars, remember, are 5 pips per bar range charts, as you can see up here. Australian dollar, 5 pips per bar. So when it goes down, you know, and hits this area, and there's 2 bars in a row, it can't break this area. You might want to exit half your trade here and put your other stop of the other half up here at 31. So you would have got out of this trade, let's say at 25, short at 41. You made 16 pips on the first half and maybe only 10 pips on the second half. But your risk is less than 10 pips, and that's the key to trading. And, you know, let's face it, today is a relatively crappy day without much, you know, trend strength.